Welcome back to this YouTube channel. Channel yokajja ogenda okusomerako trading psychology. Not anywhere else you'll find this, bro. Trust me. So, ate tunagenda deep into this course. Njagala nsooke nkusomese how price moves. Ategere how price moves. Because wenoyiga kino ojja kuwooka ati nze it's like a shortcut. Okitegera because ebizibu byonna byetusanga psychologically tubisanga tugezaako predictinga where price is going, what price is going to do next. So once you know how price moves, if you are done realistically, the real way how price moves, it will be a hack, it will be an easy way to beat anything else. So this is 1.02, our next lecture in trading psychology. Let's get straight to it, not wasting any time. You know very well that when you're trading, there is something happening behind your candlesticks. Take it. Always happening behind what you talaba. That's how price moves. It doesn't matter. You will just money ICT ya kugamba ntino, simani ya holding algorithm ya katari. Wachitegera. Eba kugamba ntino smart money, bolo bagaya batindi ya order block waiting, batindi ticket ingano, batindi feeling up ya value gap, then driving up price to the next point of liquidity. All that garbage, all that nonsense. Wachitegera. Gwawulira yonna tebina makulu. All that's just technical analysis. Wachitegera. Realistically, price etambulate from one point to another. The only way how price moves from one point to another is from an imbalance in the degree of conviction between the traders who believe prices are going up and those who believe the prices are going down. I repeat, all price movement results from an imbalance in the degree of conviction between the traders who believe prices are going up and those who believe the prices are going down. Let's explain this. Let's assume price of your USD is at point A, which is 1.0, which is $1. Take it. At $1 negenda ku $2. When you put on a position at price A, which is $1, take it, for a trade to go through, because this is trading, it's buying and selling. Why not kuba omuntu ku side endala nga ye kyakola ngali mukola ekintu kimu bo buying nga ya selling. Take it. It is always two orders at the same time. You buy on the other side, why not kubeerayo omuntu nga aselinga. Kati mwena muteekako order at the same time. Bwegenda ku buy side, omuntu abayinze nga akola profits. Bwegenda ku sell side, omuntu aselinga aba akola profits. But how does it move from 1 to 2? Okitegeera. So wamujja mu trade omulala, trade owokusatu okitegeera, n'owokuna, n'owokutaano okitegeera. Bonna ne tubagatta aba traders abali mu kubayinga at a certain level, at a certain time t okitegeera. Ababayinga bwe basinga abaselinga obungi. Babeerawo kye tuyita imbalance. Okitegeera kati eno imbalance ekozinga price ne movinga mu buy side. Okitegeera. So this imbalance between the buyers and the sellers causes price to go up. Okitegeera. In other words, singa tubeera tuyingana nga ffenna tuli eno wali abantu 10 eno wali abantu 10 naye nga ffenna tuli mu kubuyinga, for example, tuli mu kubuyinga one lot ya euro USD, tuli mu kubuyinga one lot ya euro USD. Price tejja kutambula, ejja kubeera at the same level because there is no imbalance. But if eno abali eno ababuyinga they buy 5 lots, nga fa baselinga we are selling 4 lots, price ejja kutambula. Wamukitegeera. So the only way price moves from point A to point B is the imbalance in the degree of conviction between the traders who believe prices are going up and those who believe the prices are going down. That is the only way. I do not give up. I don't care, bro. I don't care whatever they tell you. I don't care what you have learned. I don't care what you have seen on the news. I don't care what you read in a Wall Street Journal. In a Wall Street Journal, this is how prices move. And the only way to make money in these markets is to buy low and sell high. Let's change our look at your what's the low, what's the high. So the only way to make money, like we're buying at 1, the only way to make money is when other traders come in. When you have bought at 1, for them they buy at a worse, lower price than you. Now buying at 2, causing a price of moving. Then we're buying at even a worse price than ababa sources. Maybe they buy at 3, causing a price of 1 again. That's how prices move from point A to point B. I hope you will match together. Price doesn't price tetambula nti olwokuba nti nno certain lines are crossing each other. Price nekola kitambula. Price eri mu kutambula olwokuba olabyewo a bullish engulfing candle. Come on guys. Price eri mu kutambula olwokuba olabye a certain pattern. Maybe a falling wedge, a rising wedge, oba olabye a pattern like head and shoulder. Price does not move. Price eri mu kutambula olwokuba nti nno your trading is an session is an eating a stop losses is once then again that liquidity, and then you think that's why price is moving. Price is not moving based on your technical analysis. Okitegeera ekyo lino kijja mu technical analysis just a reacting kubiri mu kwapeninga ne predicting what may happen next, but that's not the reason why price is moving. You understand? There are people who trading at bakosa na technical analysis. Okitegeera they don't know your candlesticks, they don't know anything to do with the swings, about just about trading out trading, okitegeera, and they make money. So price does not move by what you're seeing on the screen. Okitegeera waliwo players abali involved mu katali okuba nti price moving up from point A to point B. Okitegeera mulimbe tuyita ba dynamic traders, then nemera mu tuyita ba passive traders. Ba dynamic traders bano nja kutegeera abantu abalina obusobozi price okubanga etambula okuva ku point A okugenda ku point B. Okitegeera I don't know who they are, oba olina kumanyi ogwamanyi, okitegeera, but I don't know any of them, but they can be hedge fund managers, okitegeera, they can be institutional traders, they can be banks, okitegeera. Era wera wegendereza most hedge fund managers, if you know some of this, when they are trading, they don't go against each other. In fact, they come and help each other out. Okitegeera onasobola okubeera nga ali mu position nga position gyalimu ali mu loss. Okitegeera atamanyi loss weva kati ono munna asobola okujja namuyambako n'abayinga abeera nga amujja muki so that they make the markets come up. Wasoma akatabo ogobeera wasoma The Psychology of Money. I don't remember that there is a company that was floating stock yayo yali eribulire Warren Buffett najjamu. They sat in a meeting n'abayamba okubeera nga stock yayo alinyuma. Waliwo omuntu yali ali shortinga naye nga alina inside information. That's what I heard. If you read that book, Psychology of Money. So one thing these guys do, they don't trade against each other. Okitegeera they don't bakolera wamu. Kati ffe retail traders ekizibu kye tulina tetukolera wamu. You guys, if you watch the movie Dumb Money, you would have seen the power of us retail traders. Okitegeera era these guys erimu ku bye bakola, they make sure bajjawo engeri gyetusobola okuba nga tukolere wamu. Kuba tukolere wamu tuba tujja kubasinga amaanyi. Kiraba tuli bangi, obusente bwaffe butono naye obubeera nga bumutikana cause a disaster to them. So they try so much to make sure we don't have a way of communicating the trading into the much. If you watch that movie Dumb Money, because you are body basing up where you are, this guy, let me go in summary about this guy who was buying a certain stock, and stock to your money. Now we are buying all platform the back on getting I don't remember the platform, but take it like it was a social platform. It was like influencer baffe. Nga wagamba abantu dina buying this stock and I'm holding abantu bajamba buying okitegeera. So you're buying and communicating n'agamba abantu I'm buying this stock, and many people started to spread the rumors okitegeera. Ekyo community yonna n'etandika okubuying. Remember they are just even buying, they don't know even why they are buying, but these guys are just buying. At the end of the day, that's why they call us dumb money okitegeera. Abantu batandika okubuying and buying. Kati waliwo one hedge fund guy, institutional trader, was an hedge fund manager. He yali ashortinga that stock okitegeera. But when this guy buyalaba nga so many retail traders are buying this stock, yaseka utesenagari wano kadamani. What he did, he continued nayongera ku position na shorting okitegeera. But the stock, instead of selling, yayongera okulinya wakulu okitegeera, because retail traders bali bangi. Kati guy kyakola nasigala nga agamba retail traders I'm still holding, while they are communicating nabo abaana ne bongera okubuyinga, abaana ne babuyinga. At certain time till hedge fund manager alina okulaba ekintu mutuufu kimutuddemu, he's losing a lot of money. This guy lost a lot of money. It was billions of dollars okitegeera. Then like what they do nayita banne balizeeko okubeera nga bamukwatirako. I think bali trading bali bayitiramu eno Robin Hood ero app bamugimanyi. Banne ne bajja ne bamuyambako bamugye mazzi because he was drowning okitegeera. Bamuyambako naye era ndigana. At the end of the day, like era nga obimanyi, these guys ended up cheating okitegeera. Bagenda ne bagira olukyalo wa Robin Hood ne bacheatinga nga tutyasobola kubuying a stock, but you can only sell okitegeera. Undi ne biyingira mu Congress ne babayita babawozesa emisango biki. At the end of the day, guy nasigala najja na Congress baba mukyaji ne babagamba they did inside trading biki. Yeah, the guy ended up winning, nasigala nga holding a stock okitegeera. But these guys, they cheated. That's how they did it. At the end of the day, you cannot beat them. If you beat them realistically, but they never cheating. They have information gye mufuna mu gye muwoza gye musoma. They make sure you learn that. They pay those guys to teach you that stuff. Lumala okubisoma, they have information from your brokers. Babroka bonna ab'amaanyi abasinga okuba ne community babawa your information. As we repro firms, nawe toli secure. Nazo information eyo babeera bagibawa. So these guys, they come in and they do that. But at the end of the day, That's how prices move. They move prices purposely. But the typical swing trader, they don't have those means to move price purposely. These guys, they have the right psychological resources and they have the money to move price purposely. They make sure you're on the opposite side of their trade. They need the hearts, the passive traders to be on the opposite side of their trades. Otherwise, they will not be making any money. So by making sure in all ways they can drive price up purposely. They are then all of a sudden they drop the prices. New cryptocurrencies, bitcoins, even when you go typical technical analysis or whatever, things like pump and dump, things like dump and pump. You see a certain staggering the price of it uptrend. But when it's selling, it does it so aggressive. A certain price can trend like for 2 months but in just 3 days move over the trend is in just like 3 days trading like for weeks and weeks and weeks. It's like pump and dump and pump. Another time you're sharing out the week long. I think you see something pricing already in term like all of a sudden it moves down very fast. Maybe something like a software, then you die the direction. But you're checking out the week longs and the week shorts. Abantu ababuy is very sure they are not confident, they come and shake them out, then they continue to drive price up. So these dynamic traders, they know and understand the mindset and behavior patterns of the crowd or the herd. By the herd, it against the retail traders, the typical swing trader, or the non-dynamic traders. That's what I mean. These guys, they call themselves the herd master, and they call us the herd. They call themselves the smart man, and they call us dumb man. So they know and understand the mindset and behavior patterns of the crowd or the herd. They know what we are doing. They have information where we are buying at, because ICT, smart money, you're trading the same garbage, the same nonsense, and they know exactly what you're doing. In case you don't know, most of the famous educators, they have one information you have so missing. Most of the things you know about technical analysis, these guys, they pay these educators to come and spread this knowledge. So that order blocks, fair value gaps, imbalances, most smart money now there is a nice a lot of information here. At the same time, people are buying at level most cases. The one buying supply and demand. You find it's the same level, people are buying that, so they are trading different strategies. So they know the mindset, they understand, and they can know behavior patterns of what the retail trader does. You feel me other money over we always do the same thing. It's like you don't trade maybe as a buying, that's when the market starts to sell. You enter in bets, you enter in based on emotions, something like that. So they know exactly what we are doing. Whenever possible, they will use that knowledge to move prices in a way that will extract the most amount of money from the largest number of traders. That's their mission. That's what they do. Because there's a knowledge price. Because they know what you're doing, bro. They know you're trading ICT, they know you're trading your smart money, they know you're trading supply and demand, they know you're trend following. Back then, over there, there's they were like 2000, 2002, 2004 around there. When we have a strategy of trend following, then right now, see if you're still trading trend following strategy, it's not working anymore. It's working, but it's not working very well like the way it used to be. Because when you have a clean uptrend, then you can see I'm very aggressive. And aggressive move median is what? Maybe don't get young is the area against the trend. I think I'm reversing and I will trend. So I don't know if the trend is still your friend, but this is what they do. They have the knowledge to move. They will use that knowledge to move prices. Extracting the same because that's how they make their money. They drive price purposefully. They know what they are doing. It does not work all the time, but they know what they do. No one else does know. they know what they are doing. They have the right psychological resources. These people, they have the right psychological resources. These guys, and not just the right psychological resources, but they also have the right amounts of money to move price. Trust me, they know what they are doing. It does not work all the time, but my friend, it works almost all the time. Olina kugamba nti amanyi ebintu bakikolamu mpozi ng'ali omukupo. Mpozi ng'ali omukupo. But if it's not among them, akulimba. And if you have not seen anyone drive prices, then you're not going it's garbage, it's nonsense. I saw many movie that movie was so fun, the smart man. Nebaja nebagira liquidity wa session, then we're breaking a structure. You know that trade is common. When I see 2020 mentorship yakora, the smart money yakora. But I saw some guy explaining that it doesn't work anymore. Paso kani bagikola ati na yene fokali kuli, then they come for it the second time. Think that kumulonyo kudako but it used to work. But when they see so many people are trading it, babira eva machusa abayita wekira. That's why you find people are like crazy. It's been working, but it's not working. Despite it is man and it's not it. It works for some time and it's not working. So you must always be flexible, by the way. So they know what they are doing, my friend. And they don't have any reason actually to go their age. So much in Abland, you're not going to never worry about influencers, but it's okay, it's damage. Then there is the passive traders. Me, you, any typical swing trader is a passive trader. Once we look at traders. The typical passive technical trader is expecting other dynamic traders to make him a winner when they usually have little or no knowledge, insight or understanding of how the dynamic traders operate. We don't know how they operate, but we are at their mercy. Because when you buy at point A, the only way for you to be profitable is when a dynamic trader comes in and buying up for 2, and buying up for 3, and buying up for 4, 5, 6, and so on. In other words, we need them to be profitable or to have winning trades. The typical passive trader does not realize that it only takes one dynamic trader somewhere in the world to negate the positive outcome of his age. Positive, not passive. Positive outcome of his age. So most little traders out there, this is one of the questions I told you to answer after. They are not aware that it takes one dynamic trader somewhere in the world to negate the outcome of your age for your strategy. You can put on a trade, and everything is good, everything is on point. But then the trade doesn't work out. Because a certain dynamic trader somewhere has not trading in the opposite direction of that trade. So what this statement means, the typical retail trader or passive trader is not aware of this. So what he does is he blames the strategy, fails the trade, and then he comes another setup comes yet the reason why price didn't go in his direction, the reason why he lost that trade, it had nothing to do with the technical analysis. And what is so funny, man, what I hate about this stuff, they talk all sorts of nonsense. I think on the whole engulfing, they give themselves a lot of reasons to believe that for them to feel good that why the trade didn't work out. Yet it has nothing to do with any of that. So it takes only one dynamic trader. Remember we said for you to make money after you buying, maybe at buying at 1, other traders who come in, they buy at a worse price than you, at a worst lower price than you, higher price than you, maybe at 2, 3, 4. That's when you're making money. So you can buy at 1, maybe buying at 2, then you buy a certain dynamic trader at 3, nothing, and you make a loss. It has nothing to do with your technical analysis. But we as people, reasons why things happen. So we shall ask ourselves, why did it happen? We start to look around why it didn't work out. But the one reason you're again, I'm making sense. It's garbage, it's nonsense. That's why you need to learn to start to think in probabilities. Thinking in probabilities. Otherwise, you cannot trade if you don't think in probabilities. You need to train your brain to start to think in probabilities. Let me give you an example. An example I'm trading in zone. If you have read the book, I don't remember the chapter, but I remember the story. This was a guy who was so good at analyzing charts. This guy, he comes in, but his problem was he was losing a lot of money. That he reached an extent. He lost the money of his relatives, now losing his other friends, now losing his money. But he was a good analyst. Like, I analyze very well, price a whole but I'm losing this money. Then he comes to Mark Douglas. Now I'm in a situation. I'm going to help me out psychologically. How can I beat this? Mark Douglas now you're more going First of all, I'm often a analyst. Let's get a job as an analyst and do something that you're good at. Then buying what he did. Again, analyst. Certain brokerage firm at a certain, it was a Chicago board of trade somewhere. Analyst. Then his boss was an old school. When I was trading in the pit, you guys have heard the pit. They were trading based on technical analysis or market direction. That was his boss. At your boss when I meet, come and analyze for me. Show me how this technical analysis stuff works. Show me. But your boss when analyzing, this is the law of the day. Not just the law, but this is the law of the day. Then his boss is like, sure. Then the guy is like, yeah. You understand when it's the law of the day, take the price, again the law. So if you get the law of the day, when price comes back, you just need to buy that. Simple. So this guy, he a boss one. Price will do a the law of the day. Instead of buying, he did the opposite. You're selling a guy now 2,000 shares of soybeans. Now could be similar. I take your order 2,000 shares of soybeans. It was a heavy order, like it was $1 million trade. Now buying at that point, not selling at that point. But you know what? The law of the day, price moving down by 2 pips. We are selling this in law. Bro, if I can do this, that means anyone can do this. If I can do this, anyone can do this. So this is your technical analysis, guys. Sorry, I just summarizing that one now. That's your technical analysis. Anyone, it takes only one dynamic trader to come in and get the outcome of your strategy, your edge, your mathematical formula, anything. And it has nothing to do with your technicals. What is all about? Reasons why and they do it all the time. That's why you see false breakouts. That's why you see something that's so perfect, it's been working. That's why you see most especially on YouTube with your community. Why? Because I'm saying you take out their money. You understand? So this is your technical analysis. And if you know how prices move realistically, you will never put on a trade without putting on a stop loss. Because it takes one trader, you see, somewhere to come at a position on your edge and it doesn't work. And your edge has nothing to do with that. Ensonga zonna out maybe in setup with a simaniki you see one of the someone now kunyula tumani wachitagenda tambula simani kanda atete eyo country yabadenga those reasons you don't know how the markets move realistically so that you execute one. If you understand this, executing will be easy for you because like predicting what the market is going to be next, it won't matter anytime. Market direction, that's it, guys. That's how price moves. Now the other part of this lecture, we are going to study the characteristics of technical analysis. How does technical analysis work realistically? It doesn't mean that you cannot make money. You can still make money. You can still take advantages of loopholes and make money. But you have to understand how you have to think to make money. You understand? Technical indicators and price patterns. By technical analysis, together technical indicators, price patterns, everything, candlesticks, everything, you're about chart. Technical analysis. So what is its characteristics? Number one, the patterns basically measure the collective mind of the market, indicating when there is a high probability of one thing happening over another, represented as an edge. What that, bro? The patterns. The patterns basically measure the collective mind of the market, indicating when there is a higher probability of one thing happening over the other. And this is the reason why technical analysis works. The market has a memory. You understand, guys? The market has a memory. If people have a pattern at a certain point, and what you say when the market comes to the same position, high probability chances are the same thing is going to happen. Though it's not certain. But high chances are it's going to happen, and that's the reason why technical analysis works building on all time frames. But technical analysis, it measures the collective mind of the market. Market traders, everyone who is involved in the market, even if it's an algorithm, technical analysis na predicting a higher probability of what's going to happen next. You understand, guys? And number 2, because the patterns edges show up in every time frame, technical analysis turns the markets into an ending stream of opportunities to enrich oneself. You see these patterns, they are happening all time frame. The dams happening. So what does this mean? This means, bro, if you have the right psychology and if you have the capital, there is an ending stream of opportunity in these markets to enrich oneself. Trading, this is like the hack. This is like the fuck you to the world, Once you understand this, you have the right psychology and you have the capital. Making money is easy and it's endless. Just go with limiting another money this because of this point where it comes from. But it's endless. You understand? But listen to this very well. Not on a trade by trade basis, but rather as a percentage over a series of trades. You cannot predict the market on a trade by trade basis, but rather on a series of trades. This is it, guys. This is the holy grail of technical analysis. Technical analysis doesn't work on a trade by trade basis, but on a series of trades on a larger sample size, something like 20, 25 trades, 30 trades. There you're certain you can predict that you're going to be profitable with your age. You understand? But on a trade by trade basis, technical analysis is useless and it cannot work. You understand? That's how cannot even. If you can pick only one thing from the lesson here, just take that. You understand? That means you must learn to think in probabilities. Not just know how to think in probabilities, but you have to know and to act like it on a function level. So you have to think in probabilities because the series of trades is going to go for a profitable. You don't know how they are going to come. So you have to randomly distributed. You don't have like 5 losses in a row, like not 1 win, not 5 wins in a row. But you're sure at the end of 25 trades you're going to be profitable. But you don't know how they are going to come in. And it's difficult to execute these trades unless you learn to think in probabilities. In a functional level. Because so you have to learn to think it on a functional level. Number 3, technical analysis does not, nor can it, get into the minds of any particular individual trader who has both the financial and psychological resources to either move prices or defend certain price levels. Technical analysis these dynamic traders, these market makers, the smart man, the big boys, Technical analysis is also what's going to happen next. And you cannot know. You have to wrap this from your brain. You have to wrap it from your brain if you want to get consistency. You have to remove that expectation, that association, technical analysis with the outcome. We are not designed to think like that, but you have to train your mind to be associated. Otherwise, it's going to be very difficult for you to make the money from these markets. Technical analysis is also kukumulira kiri mu bwongo bwa musajja lwaki ataddeko position lwaki tagitadde. It just cannot. It just reacts collective behavior ya market. And this is kugamba lwaki, the reasons why it happened. Na lwaki yakikoze. You understand? Number 4, there is no way of determining the intentions of all traders. Yet the typical passive trader executes his strategy as if he is being told what those intentions are. A professional trader does not. I tell you that there is no way of determining the intention of traders. You cannot know the intention of any trader. You're not trading again. One is different. All of our trading 1 minute, all of our trading 2 hours, all of our trading 1 hour. trading for our time frame, trading a daily, swing traders, scalpers, position traders, trading ICT, trading smart man, trading support and trading a moving average. You know, everyone is doing his own thing and everyone has reasons why he's doing it. Mshitege umuntu ajja kuyingira mu moving average yange angire position ateko position then yesonga ekimukozeseza tata we have to do for money to convert his or maybe his wife yamunzisa yesterday. Mshitege, you cannot know the intentions of all traders. The typical passive trader executes his strategy as if it's being told what the intentions are. The typical passive trader or trader executing the alinga manipulations. And this is true. When you hear everyone teaching this stuff, it's bakugamba nga they know the intention of the collective mind of the markets. Watch it again. You cannot know. Technical analysts to not tell you the intentions. Watch it again. The professional trader does not. Watch it again. Executing a strategy, you have learned my intention. Yet, us, the typical traders, the passive traders, is what we do. That's why we struggle a lot to understand. Those are the characteristics of technical analysis. Watch it again. Now we dive into your solo of lecture. First of all, technical analysis on a trade by trade basis. It works on a series of things. Watch it again. Your technical analysis, your technical strategy, your mathematical formula, your indicators, they cannot predict what the market is going to do next. They just react on the prices, on the collective mind of the prices to give you a high probability of which enrichment will happen in the next, but they cannot know what's going to happen next. Once you learn to associate this, executing your trade is going to be very easy. Even if you take 5 losses in a row, you'll execute the 6th trade in a guys. That's how technical analysis works. The dynamic traders, the people who make the markets purposely, they have the reasons why they do so, they know what to do, you cannot compete with them. But you can just predict their footsteps using technical analysis. Though, if you try to predict and it doesn't work out, it's not the fault of the technical analysis, it's not your fault. Stop blaming the markets, stop blaming your strategy, stop feeling betrayed and just execute, go on to the next trade. You understand? The relationship between the math, strategy, technicals, and the movement is what I just said in this lecture. Understand the relationship between the math and the price movement is what I just said all this lecture. This is a primary characteristic that separates the professional from the non-professional. Professional, non-professional. The pros know exactly. They have this mindset. They have associated the technicals from the way, from reasons why price moves the way it moves. Understand? So guys, don't forget to subscribe and like. Watch together. This helps out for other people to get this content. Watch together. Like I said, trading about just a few people so that they can change their trading when they get this information. Watch together. So guys, that's today. Today we have learned how price moves, and in our next lecture we will learn who is a professional, who is a non-professional, how the pros think, what they do, what they do not do, and how we learn to think like the pros. Understand? That's going to be our next lecture. Watch again, guys. We're gonna be in series. By the time we finish this series, we're going to transfer your mindset. We have to watch again. And you will trade China here in Adioina, Ateja Kurava, Jakulekina, or what they did in Maku, concentrating on Australia. So that's it, guys. Thank you for watching.